This is Alan Bush with ADMIS. In the stock index futures, we did have new historical highs made in the Dow Jones futures in the overnight trade, and the S&P very close to making historical highs. The main reason for this is the Fed statement yesterday, which left in the phrase considerable time. We're referring to the amount of time that the Fed will probably wait until they raise interest rates after the quantitative easing program concludes at their October meeting. Other than that, there were a lot of conflicting elements in the Fed statement, some bullish things, some bearish things, talk of higher rates, a couple of dissenting votes on the panel. But on balance, the Fed meeting has to be considered to be a little bit dovish, since that term considerable time was left in the statement. Longer term, we still feel that the main trend for stock index futures is higher. This is a trend that most likely will continue through this year. Over in the currencies, the dollar index advancing. By the same token, we're seeing pressure in most of the other currencies, especially in the yen, which now registered a 6-year low against the US dollar. So while the Fed is on track to raise interest rates either in the middle of next year, which is the consensus view, or sometime later, which is my view, higher interest rates appear to be coming from the Fed. At the same time, we are likely to see lower interest rates in Japan, which is a very bearish situation for the Japanese yen. Also, we had some of the Japanese treasury bills that they recently purchased falling to new lows. In fact, they are now at a negative yield. So lower rates in Japan putting a lot of pressure on the yen, and this is a trend that will probably continue for several months, possibly until the end of the year or even longer. The euro currency also under some pressure. We feel that the European Central Bank will have to add more accommodation to their banking system, which is bearish the euro. So look for lower prices from here in the euro currency as well. Over in the pound, higher prices. Of course, we have the Scottish referendum today. The no campaign seems to be leading slightly over the yes group. That may be supporting the pound, at least for today's trade, but we won't know the results of what's happening there in that referendum until much later. So with the pound, I would stand aside in that currency for now, concentrating on the short side of the yen and the euro. Interest rate markets, treasuries a little bit lower, a little disappointing in the 30-year bond. They've taken out a couple of support areas. If there is any level that should hold, it's right about in this level, especially now with the Fed meeting out of the way. So still inclined to think we'll see some recovery at the long end of the curve in the 30-year bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.